welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition where our focus is on Mahindra and Mahindra's Q2 earnings that have come out today. The company's consolidated revenue for the quarter has risen by 21%. We have seen 33,422 odd crore rupees that has been reported. The net profit stands at 4,521 odd crore rupees. Again, on a year-on-year basis, it's gone up by 18 odd percent. Of course, there is some impact of the land parcel sale, and of course on SML Isuzu we've also seen some other impact as well. We'll try to decode that for you with our guest now. EBITDA and of course the operational performance has also seen an increase of about 23% from last year. Margins have also seen slight uptick from 14.3% to 14.5% now as well. Let's welcome the top management of the company to detail for us and decode these earnings for all of you. Mr. Rajesh Jejurikar joins in. He's the Executive Director and CEO of Auto and Farm Sector at Mahindra and Mahindra. Warm welcome to you, sir. Good to have you with us. Straight up, how would you describe this growth momentum in Q2? And has it started to already show some impact of the GST rate cut that we saw getting announced? And have you already seen some of the segments showing you that green tick there?
Sakshi, thanks for having me on the show, and always pleasure to be with you. I just want to clarify that the consolidated PAT, leaving out the exceptional items, which were all one-offs, was about 28% growth, which we believe is a really strong growth number. That's enabled by multiple segments doing well. So, in the core business, the tractor segment had a very strong growth of PAT of over 50%. The auto business had a 14% growth. The auto business actually was partially affected by the inability to do dispatches through the month of September, which of course got made up in October, where we had more than a 30% growth in volumes. We are seeing a very positive momentum in the market, through the festival season, and GST is one key enabler. On the rural side, several enabling factors. So, the rains have been good, reservoir levels are good, and, government spending in rural has been strong. Exports of farmers of the crops has been also a good source of revenue and income for them. Apart from GST cut, hence a very strong, rural enablers, which has enabled the growth of the tractor business. But also, other products of auto which sell in rural India also benefit from this.
Absolutely. So, sir, if you could just detail for us, how much of the GST cut impact has already been seen? Because it was just in the fag end of September that finally the sales would have shown that, and most of the expectation is that Q3 would actually be able to show in a much better picture of the entire festive season sales. But is there a particular segment where you've already seen the kind of sales that we have seen have probably reflected that GST cut impact where the demand was maximum, sir?
Yeah, so I'm just going to separate, retail momentum from the billing, and this time, compared to last year, the festival season last year, everything happened in October. When we look at this year, we have had the Navratra in most of the Navratra in September, and then the Dussehra Diwali has happened in October. So it's split between the two quarters. So it's hard to read one way or the other. What we have to look at is, the entire festival period, which cuts across two quarters, which has seen a very healthy double-digit growth both in retail and tractors and on the auto side and the commercial vehicle side as well. If we were to kind of remove the festival effect, I think the real benefits of GST will be visible from quarter 4 onwards.
Okay.
Where, because right now there is a bit of festival and a bit of GST, and like I said, split across the two. But hopefully this is something that will improve, accessibility for customers to either upgrade or come new into a category. And as we've seen in the case of tractors and even in our SUVs, customers in tractors are upgrading to higher horsepower, 40 to 50 horsepower, in SUVs to higher order products and variants.
Absolutely. So let's talk segments. You did point out how auto and farm businesses have continued to gain market share, improve profitability there. We've seen SUV revenue also grow by almost 400 basis points year on year. Your LCV segment has also gained 100 basis points too. How are you looking at where the growth is going to be seeing driving for you in Q3 and Q4, so the second half particularly?
So for tractors, we've upped the industry outlook. So we had beginning of the year put out a number of 5 to 7% for tractor industry, which we're now thinking should be 10 to 12%. So we are upping the industry outlook for tractors for the year based on all of these factors, including GST. In the
Hmm.
case of SUVs, we were already, as our outlook had put out, mid to high teens growth. We stay with that. In light commercial vehicles, we if everything stays apart from the GST cut benefit, which is mandi arrivals and all the other positive economic drivers, then maybe we'll be at early double digit kind of growth or high single digit. So which this segment has seen flattish growth for a long period of time, and hopefully we will start seeing a growth momentum pick up in light commercial vehicles as well.
Okay. Sir, when it comes to your overall EBITDA margins, already there is some uptick in Q2 vis-a-vis year on year, 14.5%. What do you see ending the year with now, sir?
Yeah, we normally don't give a guidance, Sakshi, so we'll avoid doing that, and we let analysts and so on make their own guesses. What we try to do is demonstrate our track record of how we manage multiple levers during the course of a quarter or a year. So we leave you to reach your projections, but we avoid giving a guidance.
Okay, so when it comes to the EV space, I have to ask you, is there a visible shift towards EV SUVs that you're seeing, especially in the big cities, as a percentage of your portfolio? Where do you see really EVs going from here onwards, going forward? How has the journey been in this year so far? Has there already been some visible sign of a pickup on EV SUVs?
Yeah, the answer is yes, actually, for us and the industry. So the EV penetration for the industry right now in SUVs is about 7%. For us, it's about 8.5. A year back, we were not selling any EVs. So for us, it's a substantial increase in EV penetration. And even for the industry, it's about doubled in the last over the last few quarters.
Hmm.
So it was at around 2 to 3%, 3, 4%, which has now gone up to 7 odd percent. So a substantial penetration of EV. And I think, I personally use an electric SUV now, the XEV 9E, and it's an
Okay.
absolute delightful ownership experience.
Yeah, how has been the demand, sir, of these two models? They look absolutely different from the regular cars that you see on ground. How has the appeal been among investors and, of course, consumers at large?
Yeah, so we now have retailed 30,000 of these two vehicles, which is quite a
Yeah.
large number for the price points at which we
Hmm.
operate.
Hmm.
So very delighted, happy customers who are enjoying the electric experience, but also the tech which these vehicles come with, which makes it a very different ownership experience. So overall, yes, a very positive experience. A lot of issues around range anxiety. I think people are now getting leaving behind as a area of barrier to purchase because they are, we have 79 kilowatt hour battery, which gives in city for about 500 kilometers range, and you don't really need to charge more than 3 times a month for most customers,
Yeah.
which means that you really don't have to worry so much about charging. And most people now are able to put charging at home, so it's actually easier than having to go to a petrol pump. At least I experienced that. That it's so much easier to just charge the car at home rather than queue up at a petrol pump. So actually,
Hmm.
it's a huge positive for as a customer experience.
Okay, sir, highlight for us your launch pipeline for Q3 and Q4. What do we expect? That's what investors, consumers must be waiting out for.
Well, we have just announced that on 27th of November, we will reveal a new electric, we're calling it the big electric SUV. We have put out teasers around that and more on that over the next few days.
Okay, we'll wait by to really hear from you more on that front. But overall, when we talk about your growth projections, of course, you do not give the guidance on that front. But when we compare vis-a-vis last year, the entire year, which has been bogged down with a lot of uncertainty, a lot of issues around rare earth, semi-conductor issues, so many of issues that the industry has faced with vis-a-vis last year. Are we at a better footing both on the industry and on the company level? Are we projected to grow much higher and do better than the previous financial year, sir?
I think the answer is yes, because each sub-segment in the SUVs, I said mid to high teens, which is quite a substantial growth story. On tractors, we are looking at double-digit growth. On LCVs, we are looking at a growth. So yes, for this year, hopefully the year should end with a healthy growth trajectory.
Okay. Okay, fantastic, sir. Thank you so much for speaking to us on Business Today Television. Yes, wishing you all the very best for the upcoming quarters and hoping to see that big bank launch very soon. And waiting by for that, and we'll speak to you then too.
Thank you, Sakshi, for having me on the show. Pleasure.
Thank you so much. Always a pleasure to have you with us. All right, viewers, we'll wrap it up on that note. You heard it from the top management of M&M. They're confident of the growth improving going forward from here. Things improving. They're already, on a market leadership space when it comes to SUVs, to tractors. They've inched up their tractor projections as well going forward from here. So lots of positives to really look at, and of course, a lineup of new launches. 27 November is when the next big EV launch will happen, so watch out for that one as well. Many thanks for joining in, but do stay tuned on to Business Today Television to gather a lot more on the earnings front and on the markets front as well.